Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is 11/11/2024, and Bitcoin is breaking out in a major way. All right, and the target, as far as I'm seeing, is 89K. Yes, 89K. After that, we do expect a significant retracement, and I'm going to tell you where to, and also I'm going to tell you when I think that retracement will find support. So if all that sounds interesting to you, then watch till the very end. We're obviously also going to talk about altcoins and what they're doing. So let's get into it. Bitcoin did something unprecedented. Let's start on the smaller time frame. Let's go from where we left off. So last time I spoke with you, Bitcoin was in this range right here, okay? And it was going sideways and up very slightly, but it was essentially stagnant, okay? During these periods of time when Bitcoin's going sideways like this, in this market environment, and when I mean by market environment, I mean a market environment that has the US dollar coming down, that has Bitcoin dominance coming down, right, in a trend. This is when altcoins pump, okay? So basically what I'm trying to say is this. Altcoins pumped, Bitcoin started then pumping, okay, and broke this resistance that we have as this dotted line, okay? And once it reaches its top of 89 and starts going sideways a bit, guess what happens? Altcoins start pumping again. Okay, so that's the first thing I want to say. This is a tried and true pattern in the crypto bull market. You'll always see that, okay? And you'll see it also in the Bitcoin dominance chart, where during those periods of sideways consolidation, Bitcoin dominance will come down, i.e. altcoins will start pumping and, gain market dominance against Bitcoin. And then when Bitcoin starts pumping again, that Bitcoin dominance goes back up, and then the cycle repeats. So you'll basically see boom, 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 something like that. Okay, so that's what I'm seeing in the crypto market in general. Now let's talk more specifically. Why 89,000? Why is that my target for Bitcoin? Okay. Well, quite simply, this is a pattern target. Okay. This is a target that's acquired by taking the height of this descending broadening wedge that we broke out from. Okay. So before I place it, we broke out of the descending broadening wedge of 7 months, retested it, and then pumped. Okay, so that is a legal and obvious breakout. Again, break out, retest, then that's the breakout. Okay, it's just I thought that once we got here, we'd come back down here and then hit the target, but it's fine. Again, it's not about if you're always right. It's about if you mitigate risk and if you can read and react. People always ask, hey, you had an invalidation at, this level, and if Bitcoin breaks that, what do you do? Well, I stop, reassess, observe, and then, come up with a new trading thesis. And this is exactly what I'm doing. So based off of the height of that descending broadening wedge, if you see that the projection is 89, something like 89 to 90K. That's my target for Bitcoin. So we're almost at the target. And again, typically speaking, when Bitcoin runs, these other altcoins, or altcoins, there aren't other altcoins. It's just, when Bitcoin runs, typically altcoins kind of stagnate. They're consolidating, okay? And then when Bitcoin starts cooling off, capital rotates back into altcoins. Now, there's a few reasons why we're coming down. And so it's very smart to prepare for this in many ways, right? Depending on what asset you're trading, you know, it's going to be a little different. Obviously, if you're in Bitcoin, you take profit and that's all that is. If you're in altcoins, you know, depending on that altcoin, you may want to do something different, but essentially, it's almost a given that we're coming down. One of the main reasons is we went sideways. We went into the weekend sideways, okay? So this was the start of the weekend, and then we went up. Also, today, November 11th is Veterans Day, meaning it's a national holiday in the States, and technically the US dollar currency index isn't trading because the traditional stock markets, financial markets in the US today are closed. This is a holiday. So don't expect for any of this to go, what's the best way to say it? None of what happened since this consolidation over the weekend is valid insofar as it can stay. It has to be retraced upon. That's the first reason. You have to be, basically, in other words, I'm saying that we created a massive CME gap, Chicago Mercantile Exchange gap, whereby the traditional financial markets were not able to trade this move. And so we're going to have to retrace, giving those buyers and sellers a chance to also trade this move. That's one way to put it. But essentially, we're coming back for that reason. The other reason, look at this red rectangle. Very clear resistance on the chart, right? What happened when we came up here? We broke that resistance. Well, any resistance worth its salt has to be retested as support. So this is likely to get a retest. It's not 100%, but it's just my eye sees that. It jumps out at me on the daily time frame. So I'm going to say that's one possibility, one probability, right? It's not always that, you know, certain resistances that are kind of weak and like spurious have to be retested, but I'm just going to file that in my head as a possible level for retest because it's a clear level. As you can see, every time the price hit it, it was resistance, resistance, resistance until it broke it, likely to be retested as support. That's reason number 2. Reason number 3, we're going to zoom in for a second. Guys, and if you're getting value, please like, share, and subscribe. Consider buying me a coffee at the pinned comment below. So on the smaller time frames, you can see that if indeed this is an impulse, which, I mean, it moves like an impulse, it looks like an impulse, it's more likely than not an impulse, then basically what we had since this, I have to reread this, right? Because I read this as some sort of running flat, right? And that was obviously invalidated once this broke out up to the upside sufficiently. So what is it now? It has to be an impulse. If this is an impulse unto itself, that means this was an impulse unto itself. This was 5 waves up, this was 3 waves down. The 3 waves are 1, 2, 3, something like that, okay? Now, if this is an impulse unto itself, then it has to be treated like an impulse. Once it hits its designated target, its resistance of 89K, I'm going to have to pull my Fibonacci retracement levels, and it has to come back down more or less to certain levels, right? And again, I really like that red rectangular level. Now, the first thing that I ask myself when I pull these levels are, well, my red levels are below, significantly below the phi ratio, which any impulse is legally allowed to not come below. Meaning, if you're in a proper impulse, in a proper, contiguous advance, the retracement should be a maximum retracement to the 0.618. So if my red rectangle's down here, coming down to the 786, is that legal? Is that even probable, right? So then it begs the question, well, is this a clean and clear and pure impulse, or are we dealing with a flat correction? And we may very well be dealing with a larger flat correction. I'm not saying that this portion is a flat correction. Obviously, that is the impulsive portion of the flat correction if it were a flat correction. But I want to bring to your attention that the idea, the notion that most patterns that break out, the breakout, and I don't know that this was the breakout. This was a small time frame retest, perhaps. The breakout typically retests correctively. Okay, I'm going to say that again. Most patterns that break out on a high time frame, the breakout typically retest correctively. So I'm just going to do a really quick example. If you have a triangle, it breaks out. You break out, obviously, in some sort of impulse. You come back correctively because that breakout wasn't purely impulsive. The retest doesn't always respect the 0618. It comes down however it needs to come down to retest broken resistance as new support. So by that I mean this. Given that we broke out from down here, it wouldn't be shocking, and it's on the table for me, and I'm preparing myself to go all the way up here and all the way down here. Or back down here. Right? Red, both the red rectangle and my very important midline of my multi-year channel. So all I'm saying is don't just assume that, oh, this is an impulse, I'm going to throw fibs on it and then expect the retest to come down 618. No, we're coming down. Question is, how far? We're going to retrace everything we did over the weekend, but are we going to stop there or are we going to continue? Okay, that's the question. That's the question. So I would prepare for both, but it's highly likely, more likely than not, just looking at the chart, that given everything that you did here, and given the fact that you broke out of this channel, or sorry, this pattern, and that you did this little thingy right here in the midline, that you find support at the midline, and that midline support is coincidence with that red rectangle. So that would be my first highly probable target for Bitcoin on the retrace. So around 71 or 70K. Okay, so that's what I'm seeing. So, but we can talk more about that after we get some sideways price action and alts pump and all that stuff. Okay. Last but not least, I'm just going to talk about the total 3. Remember, the total 3 is everything minus Bitcoin and Ethereum. Okay, and it gives you a decent idea as to what's going on in the altcoin market. And what you can see here is that we did get a breakout of this bullish reversal pattern, inverse head and shoulders, right? And this is our technical target up here, which is confluent with this prior swing high, as you can see. Yep. So this is a high probability target. We're clearly in the middle of that breakout and we have yet to hit it. And so this. Why are we in the middle? Some alts have yet to break out at all, but some high market cap alts, Cardano, Dogecoin, have already started that breakout. That's why you're seeing that there. Okay, so do expect it to continue. That's what this means. Very highly likely that you do see that altcoin pump that I talked about once Bitcoin starts to consolidate, and once the traditional markets open back up, and it'll be like, hey, Bitcoin, what did you do over the weekend? How was your holiday, your Veterans Day? You pumped? Come back here. You know you're not supposed to pump when we're not watching you. That's what the US dollar currency says. It comes back down to those levels after that sideways consolidation. I would be remiss if I didn't mention also the fact that, we're already at 88, by the way, so almost there. I would be remiss if I didn't mention the fact that next Friday, or this coming Friday, the 15th, is the local market the next full moon. So it should be treated as a local market bottom statistically. So wouldn't be surprised if after we went sideways for a few hours, we then found our way down and we found support either here or down here, but more likely than not here, right around that 71 area on the 15th and the subsequent weekend, 16th, 17th. That's what I'm seeing on the charts. Guys, I hope this was helpful. This was useful. Once again, like, share, and subscribe, and consider buying me a coffee at the pinned comment below, and I'll see you next time. Take care.